For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. One artificial intelligence focused stock that investors might want to consider buying right now is showing strong potential for significant growth, with one Wall Street analyst forecasting a surge of 60%. Palantir Technologies has recently received its highest price target yet from a respected research firm, signaling confidence in the company's future prospects. Over the course of 2024, its stock price soared by an astonishing 340%, far outpacing many of its peers in the broader market. With such an extraordinary rise, it would be reasonable to assume that analysts might encourage investors to take profits and reduce their positions in the company. After such a massive rally, concerns about potential overvaluation and future growth sustainability would not be surprising. However, some of the most respected analysts on Wall Street remain highly bullish on Palantir's future. Two prominent figures in the financial world, Dan Ives from Wedbush Securities and Mariana Perez Mora from Bank of America, continue to express strong optimism about the company's trajectory. Both analysts have maintained their positive outlook, reinforcing the belief that Palantir's growth story is far from over. Adding to this growing sentiment, Loop Capital Markets has recently made what might be the most aggressive and optimistic call on Palantir's stock to date. Rob Sanderson, an equity research analyst at Loop Capital Markets, initiated coverage on Palantir in late February and assigned the stock a buy rating. While multiple analysts have already recommended Palantir as a solid investment opportunity, Sanderson set himself apart from the crowd with a particularly bold forecast. He issued an ambitious 12-month price target of $141 per share, which represents a potential upside of approximately 60% from its current trading levels. At the time of this analysis, Loop Capital's price target is the highest among Wall Street analysts who actively cover Palantir, underscoring the firm's confidence into the company's future performance. While Palantir's growth potential is exciting, one of the primary concerns for investors is its valuation. When a stock experiences a meteoric rise, as Palantir has, the question becomes whether its current price levels are justified or whether it is overextended. Valuation metrics play a crucial role in this assessment, yet in the case of Palantir, traditional benchmarks may not offer the most accurate picture. Despite the company's remarkable performance, investors must take into account key financial indicators such as price to sales and price to earnings ratios. Based on these metrics, Palantir's valuation appears elevated compared to industry norms. Growth stocks, particularly those in the software and artificial intelligence sectors, often trade at premium valuations due to their long-term potential. However, Palantir's valuation metrics stand out as being especially high, even by the standards of high-growth technology companies. Over the past year, the company's valuation has expanded so dramatically that conventional methods of evaluating its worth may not provide a clear sense of whether the stock is fairly priced. This discrepancy has led to ongoing debates among investors about whether Palantir remains an attractive investment opportunity despite its rich valuation. In his analysis, Sanderson compares Palantir to well-established software companies. While neither of these firms competes directly with Palantir, they serve as useful points of comparison due to their dominance in their respective industries. Adobe, a leader in web design and digital media solutions, and Salesforce, a major player in customer relationship management software, have both built deeply integrated ecosystems that create high barriers to entry for competitors. Their ability to maintain strong market positions despite competition highlights the value of establishing a powerful, all-encompassing software ecosystem. Palantir, while still a relatively young company compared to Adobe and Salesforce, is working toward a similar level of industry dominance. The company is rapidly expanding its presence in artificial intelligence-driven data analytics, positioning itself as an essential player in the field. However, despite its strong growth trajectory, Palantir has not yet reached the scale of Adobe or Salesforce. Nevertheless, the comparisons are relevant because all three companies operate within the broader software sector and command premium valuations. Investing in Palantir at its current valuation requires a belief in the long-term narrative that the company will continue to scale and establish itself as a dominant force in artificial intelligence-driven analytics. However, accurately assessing the trajectory of a company based on its long-term potential is inherently challenging. Many factors, including technological advancements, competitive pressures, and market conditions, will influence Palantir's ability to reach its full potential. For this reason, investors must weigh both the risks and rewards before committing to a long-term position in the stock. While it is impossible to predict with certainty whether Palantir will reach Sanderson's price target of $141 per share within the next 12 months, there are several reasons to remain optimistic about the company's future, particularly in customer acquisition. Over the past year, the company expanded its total customer base by 43% and significantly increased its presence in the private sector, with a 52% rise in private sector clients. These figures suggest that Palantir is successfully broadening its market reach, which could translate into sustained revenue growth and profitability. If Palantir continues to execute on its growth strategy, maintain its momentum in acquiring new clients, and enhance its artificial intelligence-driven solutions, it has the potential to solidify itself as the premier leader in data analytics. In such a scenario, the company's elevated valuation could become more justifiable over time. Investors who believe in Palantir's long-term vision may see the stock as a worthwhile opportunity, despite its current premium pricing. One of the key competitive advantages Palantir holds is its ability to integrate artificial intelligence into its analytics platforms, creating a comprehensive ecosystem that is becoming increasingly difficult for even the largest technology firms to challenge. The company's ability to develop and refine cutting-edge artificial intelligence solutions gives it a unique edge in the industry. As artificial intelligence continues to shape the future of business and technology, Palantir's role in the sector could become even more significant. For investors looking at the long-term potential of artificial intelligence-driven companies, Palantir presents a compelling opportunity. While concerns about valuation are valid, it is important to recognize that high-growth companies often trade at premium prices. The key consideration for investors is whether they believe Palantir's rapid expansion and technological innovation will justify its current valuation over time. Despite its premium pricing based on traditional valuation metrics, this may be a rare chance to invest in Palantir during a brief period of consolidation before the stock potentially continues its upward trajectory. Investors with a long-term perspective may see this as an opportunity to establish or increase their position in a company that is shaping the future of artificial intelligence-driven analytics. With that being said, I will see you in the next video.